What is up, guys? I'm back again with another one, and in this video I'll be talking about supply and demand. So this is actually more related to the concept of support and resistance. Like I said support and resistance. We always identify it on a lower time frame, maybe like a 4 hour time frame to 1 hour, 30 minutes, 15 minutes, 5 minutes, and 1 minute even. So that's how we identify our support and resistance. But when we talk about supply and demand, these are major key levels or major zones in the market that you do not want to play with. And how do you identify them? They are being identified on a higher time frame. When I mean higher time frame, I'm talking about the daily time frame, the weekly time frame, and also the monthly time frame. These are higher time frames that you want to look out for. If you are hearing background noises in the back, I'm sorry about that. My apologies. So, how do you identify them? As you have seen with this instrument, which is an example that I will be using, is Step Index 500 market, which has just been introduced on Deriv broker website. So, looking at this place, as you can see, this market was not able to break this place for twice, but it went up, and what happened again? It was able to break. Now come back to retest this, just like I said, is the concept of what of support and resistance. Now we are applying that concept into supply and demand. So this was what our demand zone, because there was a demand to buy this market, and that was the reason why what it was able to went up. And now when the supply when the demand for it was becoming too weak and the market was able to break down, then this place has served as what our demand, uh, our supply zone, because it was supplied to the market, and also this is what our demand zone. So there was a demand here, and what do you see? The market was able to break it again, come here, break it, and what happened? It went back up again to what? To test this zone, which is what our our supply zone. And what happened? The market went down again below the supply zone, which was the demand zone, which was our initial demand zone, and able to break it. And what happened? This our demand zone is no more our demand zone, is now our supply zone. So we should be expecting our next demand zone to be at the downside. So this is how you identify the market. And as you can see on this market has been trying to retest this supply zone for a very long time now, and it has not been able to break it. So what should you expect? You expect that this market is definitely going to come down to the demand zone and leave this supply zone. So this is the concept of supply and demand. The question is, how do you identify them and how do you draw them out? Well, to identify them, you have to look at major reversal and major zones where the market is reversing. As you can see, we have how many reasons? One, two, three reasons here to find out that this market has reversed, because this is a daily time frame, so you don't want to mess up with a daily time frame. There are a lot of things that has happened within that 24 hours, and for us to be finding rejections as at those places, then those means that those places are a major place we want to pay attention to in the market, and that's how we draw out those zones. And as you can see, these zones, this place, we have one reason here and we have two reasons. At least whenever you are drawing your zones out, you should make sure that those supply and demand zones, you have at least three or more, four reasons for you to draw your zones out. If you scroll down to a lower time frame, you will definitely find out that there is more reason why this one was drawn here. So going back to our daily time frame, like I said, this was one reason, because this market on a daily time frame was retesting this place for how many days? 1, 2, 3, 4 days before it went a little bit up and was able to break it. Now, this market got here, broke it, and was trying to come up. But was he able to be successful? No, because of the bearish engulfing candle or the evening star which formed, the market went down. And this place, when it was coming up, it was unable to break it. It went down again with a bearish engulfing candle and was able to break it. Now, this market, so you have a lot of reasons. You got the gist. You have a lot of reasons why you should be looking at those levels or those zones. And looking at here again, we can see reversals in that place. So this is another reversal, which is one reason, another reversal, which is 2, 3, 4, and 5. So when you extend those zones that you have been able to identify to the future, we will find out that at a point in time, the market tend to respect those supply and demand zone in the future, because price have what? It has memories. There's history. So price tends to go back to its history, and when you see that there's a zone there is a key level, major levels, major zones there, it tends to respect those zones in the future. So this is how you get your zone. The question is, how do you draw them out? You draw them from your week, which is the close of the body, to the close of the week. So I don't know if I said that right. So I think you understand the gist of what I'm trying to say. So what I'm trying to say is that, as you can see, this is the whole body, but this is the week. So you draw your zones, which is the supply and demand, or your support and resistance on your zone. As you can see, if you have watched most of my videos and you have seen the way that I draw my zones, you would have identified that I always draw them on the wicks and not on the body of the candle. So this is how you draw your what? This is how you draw your zones. You mark out your supply and demand zone or your support and resistance zone. Looking at this as well, you can see that I drew this on the what? On the wick of the candle. This place as well on the wick of the candle. In fact, this is an amazing example. You have how many reasons here to believe that this place is a major reversal? 1, 2, 3, 4, 5, and probably there's going to be 6 here, which is reasons. And as you can see, I didn't mean that this place has not been retested before. There's definitely going to be a lot of cluster of what, of orders coming from this place, because of what? Because of the history of price. The market is tend to what? To respect this zone, probably for a short period of time, or a long period of time, of days, to come back here. So drawing them where on the wicks of the candle and not on the body is very, very vital and important. As you can see, even here, I drew it where on the wicks of the candle and not on the body. So this is how you what? How you draw out your support and resistance, your supply and demand. This concept, as I've done it for support, for supply and demand, you can also use it on for support and resistance, which is on a lower time frame. If you are trading on a lower time frame, you can use it to mark out your zones out, which are your support and what, and resistance zone. For example, I'm seeing somewhere like this, so I will be thinking that this market is definitely having decisions here, because I have 1, 2, 3, and even if I extend it, as you can see, we can see that this market was able to what? Respect that place in the past. So the price have action, they have history, they have memories. So this is how you draw them. You draw them from where? From the wicks of the candle and not on the body of the candle. So the next video, I wish to see you in the next video. So if you have found this video, if you find it to be very helpful for you in your trading, kindly like it, share, and even subscribe to this channel, and also help others to know more about this channel, so that we can grow and so that people can find this amazing content that I am dropping on this channel. So till next time, bye bye.